Hey, what's going on, everybody? This is Max with Because Bitcoin, and today we are going to be talking about Bitcoin, the total crypto market cap, and also stablecoins and how I use them to personally determine whether it's time to DCA back into spot markets or exit markets. I have personally found a signal playing around with certain stablecoin ratios that I've used to find success in timing these markets on higher time frames. Let's dive in. So this is the Bitcoin chart right here. This is the weekly time frame. Now, I'll say this, in all of my years in crypto, I haven't seen a more torn crypto CT or FinTwit. You can see basically from here, Bitcoin all throughout 2022 had a pretty significant bleed all the way down. And now we are in what some are considering to be a bear market rally, and others are considering this to be the start of the next mega bull run, followed by imminent QE and lowering of interest rates, and the time to buy is right now. It doesn't seem to me like there's much common ground right now. And, look, sometimes that's just how things goes. People are relatively divided, and maybe it just seems a little bit more than normal, but nonetheless, we're going to dive in, and I'm going to give you guys my completely unbiased and unfiltered thoughts on it. And truthfully, guys, I'll lead off with this. I am more so in the high time frame bear camp. I think we're going to be doing something like this and potentially heading down. Well, again, I could be wrong. There's a lot of other people out there that are very smart analysts that see price doing something like this. And then the Bitcoin halving comes in sometime over here. And they think we're just going to go straight up in a straight line. But as I mentioned, I found something as it pertains to stable coins, which again, stable coins really dictate the high time frame flows in these markets. I found a stable coin ratio between the two major ones, USDC and USDT, that have, truthfully, an extremely impressive high time frame hit rate. So I'm going to share that with you guys today, and hopefully it helps you guys navigate these markets. So the ratio that I want to talk about today is USDC and USDT divided by the total crypto market cap. Now, you might be wondering, we know what stablecoins are. We understand. How are you going to use them to predict where things are going to go or make calculated decisions? Well, the symbol right here is USDC plus USDT divided by total. Now, more or less what this is indicating is USDC and USDT, which are the two largest stable coins out there. And again, there's other ones, but we're gonna use the two biggest ones because it'll paint the most all-encompassing and, in my opinion, accurate picture. Because most people, when they choose to stable up, they go to USDC or USDT. So what this means is it's the two largest stable coins divided by the total crypto market cap. More or less, it's a ratio of how many people, or not even how many people really, the appetite of market participants, market players, to hold volatile crypto assets versus stable coins, which again don't move. They should in theory be pegged 1-to-1 with the dollar. Now, again, granted, sometimes they deviate slightly, but USDC and USDT have been very good over a long period of time. So when you initially type this in, you're gonna basically put it in like this. You do parentheses. You're gonna have to just do some little math up here. USDC plus USDT. Put that in parentheses. So again, we're adding them together to get a ratio of the total crypto market cap. Now, I already have it on the right side, but you would hit enter and you would get something that looks like this. All right. Now, to make things very simple, we're actually going to invert the chart. All right. Now, some of you may be looking at this thinking that this looks familiar, and you would be correct. It actually sort of rhymes with what Bitcoin has looked like and the total crypto market cap has looked like over the past, let's go back. It goes back to end of 2018, early 2019, right? That's as much data as we can collect on these. So I've already taken the luxury, just for the purposes of time, of actually drawing this out. All right. So we're going to put this grouping back on. I organized it very nice and clean here. And I also added some colors. And then again, historically speaking, I added these labels up here. Now, again, channels are made to be broken. Trend lines are meant to be broken. Everything will eventually become invalidated. Nothing lasts forever. But until something breaks, I think that you might as well choose to respect it. Follow the trend. The trend is your friend. So going back all the way from, when this channel really first began in January of 2019, we had our low, we had our high, and since then we've put in a ton of price action. Now again, this is a ratio of the two largest stable coins divided by the total crypto market cap. It's the two largest stable coins divided by the entire cryptoverse. All right. So again, I view this as the market's appetite for holding volatile crypto assets like Bitcoin, like Ethereum, like Solana, all of your favorite altcoins versus stabling up. And when people stable up, you interpret that as, well, I'm stabling up. I want to keep my money in crypto, but I think I'm going to get a better buying opportunity and I'll come back in when the time is right and purchase those volatile crypto assets. So again, this is inverted, so it has an inverse relationship with Bitcoin. All right. Now we're going to put Bitcoin down here on the bottom. We're going to put it in log scale. We're going to change this to candles. All right, now you can see how similar these charts look right here. Now again, when we first put it on, it's inverted, right? So it has an inverse relationship with Bitcoin. So for example, you might recognize this little cluster over here, right? That little cluster, this bottomed the USDC and USDT. So we'll just call this the total stablecoin market cap between the two largest ones as a ratio compared to total crypto market cap, bottomed while Bitcoin was topping. And again, same thing over here. Stablecoin dominance, counting for USDC and USDT. I'm not going to keep saying that, I promise, but I want to make sure everybody knows it's just the two big ones, okay, which make up a majority of stablecoins in terms of market cap, but it's not all of them, okay? So again, when this topped, Bitcoin bottomed. This bottomed, Bitcoin topped. All right, so let's remove this. We're going to flip it again, and we're going to take a little bit of a deeper dive into things. So now let's draw some lines here, right? Top, and again, we're on the weekly time frame. These tops can take a lot of time, okay? Top right there. We're also going to go back to the very beginning of the channel, and we topped up here. I'll fade this line out just a little bit so you can see it better. Okay, so those are tops, and now we're going to put in some bottoms, and we will mark those in green. All right, we're going to put this back there. You know what? I actually don't like that. We're going to put this back to solid, but I promise it's at the very pico top of the channel. All right, now we're going to mark some more bottoms here, and we're going to take a dive in and discuss what the potential implications of this can be. So again, I took the liberty of marking this out in advance just for the purposes of time. But I think it's pertinent to acknowledge this channel because it has yet to break, and it's basically been a 4-year-long trend almost that has indicated to people watching this, and I don't see many watching this. I actually haven't seen anybody else talking about this ratio of when to move into stables versus when to move into volatile crypto assets. And by the way, just because it tops up here at the sell it all line as we get into the red doesn't necessarily mean that prices have to go down significantly in US dollar valuations. Now, again, we're going to take a look back here. So back in July of 2019, we were at the top of this channel. Bitcoin topped out of its bear market rally right here. We bottomed right here for our stablecoin dominance. Bottomed here. Bitcoin bottomed, and again, it's inverted, so just remember that. I don't want anybody to forget. We bottomed here, roughly September of 2020, before the last bull market. Price went up dramatically as this went up. It's technically down, but up. Now, this entire cluster up here, this distribution, the Wyckoff distribution, we approached the sell it all line. Bitcoin was in distribution. 69K top on Bitcoin, the double top. Distribution again. Where did we bottom? At least temporary bottom right there, right? We ended up going a little bit lower. Well, Bitcoin did. Total crypto market cap really just kind of double bottomed, but this would have been a pretty good purchase. You know, Bitcoin was down at 17.7, so definitely looking back would have been a very good purchase. Now, you can obviously see that we're approaching the sell it all line. Now, something to consider as well, is that I mentioned this before. It can take a significant amount of time for once we reach that sell it all line, we can still go up a little bit. And it can take a significant amount of time. And you can see here from the first time we got up into this area, I mean, it took over 100 days, 126 days before we had a significant drop, give or take. We're on the weekly time frame. So I've been tracking this. We have been tracking this in the Because Bitcoin community. I've shared this with everybody. And I've said, look, could 35K or 37K come? Certainly. There's a lot of technical confluence up at that level. And I would not rule it out just yet. Okay. But with that said, is this the time to position for the next golden bull market? I'm not so convinced. All right. I'm not so convinced. One very interesting point in time that I'd like to discuss, and it's, look, we only have so many data points, so this isn't God sent. There's nothing etched in concrete. I mean, we only really can look back for 3.5, 4 years, and there's a handful of examples where this played out to a T. But this is a very important period of time that I'd like to discuss right here, basically between March of 2020 and September of 2020. So obviously in March of 2020, we had our COVID capitulation, the Bitcoin US dollar price nuked, for lack of a better term. And we reached the buy it all line. If you had followed this channel and you had bought it all, you would have bought Bitcoin, at 3K, you would have been very, very happy. But you might have been thinking, okay, well, this USDC USDT ratio was climbing up right here, and Bitcoin was as well. And that's great. That's how things should be. But once we reach this midline right here of this channel, we ended up dropping back down. But what we saw basically from the time we hit this bottom over here on the stablecoin dominance channel to this bottom over here, price was going up consistently. Okay, we had little drops here and there within, but what you would have normally expected to see is when we hit this buy it all line and then this buy it all line again. Here, let me actually clean this up here. I'll remove this and redraw it. What I would have expected to see would have been the Bitcoin US dollar price actually dropping. So while Bitcoin USD was moving up right here, that makes perfect sense because it's tracking this move right here. But once this dropped, we did have a drop in US dollar price, but we were still, let's take a measured move from the low, we were still almost 200% off of when we hit this line, this buy it all line right here. So just because we go back to the buy it all line doesn't mean that the US dollar pricing has to capitulate. I'd say more times than not it does, but again, nothing is etched in concrete. These markets, they ebb and they flow, and I think this should really be viewed of as more of an oscillator than anything. It really, to me, implies, okay, people are overwhelmingly long risk assets right now, volatile assets. Let's let the market reset a little bit. Let's let it cool off. And if that means more of just ranging between Bitcoin maybe being like 25K and 35K, we could very well see something like this. And this drops down to the buy it all line sometime around the end of the year, and Bitcoin may have done this. And we could still be, we could still be off of this US dollar bottom. Again, the bottom was just under 16K. We could still be 80% off of that floor by the time we hit the buy it all line. But again, this to me indicates, and it has worked in the past and helped me sell near the top and buy near the bottom. It's not perfect. And again, a lot of external factors come into play, especially with how complicated these markets are right now. To me, it has indicated when is a good time to try to time the next expansionary phase in the market and when it's time to maybe take some chips off the table and stable up, even if US dollar prices remain the same or they sort of range. And, it could be a big range. It could be a 50% range. You want to try to deploy your capital at the most advantageous time where you give yourself the best chance to, as soon as you deploy money, things start going up. Okay, because there is an opportunity cost associated with positioning too early. And again, even if US dollar prices, Bitcoin, let's just say sits at 30K for the next 6 months, there's an opportunity cost associated with having that money sitting there tied up, not appreciating in value, because there's other things, either in the equity markets or maybe even certain cryptos, that have a better chance to perform well while this oscillator, again, this is to be viewed as an oscillator, resets a bit. Okay. So we'll see what happens. Okay. We'll see. But one other, kind of get into the doom scenario. This has also called some significant tops. I mean, huge top. It's also called some huge bottoms. And typically these tops and these bottoms have been, not always, again, we saw it right here, they have been followed by rapid price decreases as well as increases. So what would the doomer scenario be like? Well, we've had a really bullish start to the year, typically 6 months or so before the Bitcoin halving. As we approach, I mean, even really more than that, more like 9 months before a Bitcoin halving, 6 to 9 months before the halving. Typically, the year before the halving, the first half of the year is historically bullish, while the latter half is leaning more bearish. Seasonality, July and August have been the worst performing months since 2010 for Bitcoin, far and away. So as we're sitting in the middle of July and we're near the sell it all line, you have to ask yourself, what kind of risk do I want to take on at these levels? If you just prefer to store your wealth in Bitcoin and you don't care what the price is, this video is not for you. But if you are looking to increase your Bitcoin denominated net worth, this is a pretty solid opportunity to maybe consider de-risking, taking some chips off the table if it fits your risk profile, and taking a chance that this channel holds. And the doomer scenario, in my opinion, would be that we continue to distribute up here. People move their stable coin, move from volatile assets like Bitcoin up here into stable coins. And we would see this come down over many, many months. Again, it could take 6 months to a year. We wait for the buy it all line, and Bitcoin could come down here following it and bleed and potentially even go on to make a new low. And something that I want people to consider as well is we had in Bitcoin, we had a double top. Range theory suggests, and I guess in a sense, it's sort of, depending who you talk to, it's Fibonacci to a degree. Charts really appreciate symmetry. I know appreciate's a funny word for it, to speak of charts like a living and breathing organism, but you study the charts enough and you study technical analysis of stuff enough, you begin to understand what I'm talking about. But charts thrive in symmetry. Typically, range theory will suggest that a deviation of a range to one side will oftentimes, way more than not, over 80% of the time, lead to a symmetrical deviation to the other side of that range. So as we're approaching this potential sell it all line, and things are getting pretty heated, maybe move up to 35K, 37K, who knows? But on the very high timeframes, as we're really trying to position ourselves appropriately for the next potential expansionary period, probably post Bitcoin halving, again, which is going to be April 2024. Look, we had a double top. Is it possible that we create a symmetrical double bottom? Well, time will tell. Nobody knows for sure. But again, if you're very bullish on Bitcoin here and you think I'm crazy, you can lean on this example here where we hit this buy it all line. And then we came back, between March and then September, hit the buy it all line again, and we were 150 to 200% off of that low, depending if you want to measure from body or wick of this capitulation candle in March of 2020. So if something like that happens again, then maybe we would just spend more time kind of like ranging up here above 25K. The oscillator resets. The halving is like right, here. And, then we would just continue to go up and have an expansion period. So look, time will tell. But again, it's a very useful indicator for trying to time these high time frame moves. I wouldn't go all in or all out necessarily with any indicator or any oscillator, but this has a very, very impressive high time frame hit rate. And, I've used it to time the market on the high time frame, and it's worked wonders for me. So even if price is higher than where it is here, I don't think that there's much room left to the upside before we see significant drawdown in price. or at least a ranging environment where you don't necessarily want to have your money tied up in Bitcoin or volatile crypto assets for that long. So anyways, guys, that's all I got for you today. Thanks so much for tuning into the video. I hope you guys found this helpful. Again, this is Because Bitcoin. We are a financial media company with a very heavy emphasis on digital assets. And today we discussed USDC plus USDT divided by the total crypto market cap dominance and how to potentially time these high time frame rotations between volatile crypto assets and stablecoins. If you enjoyed the video, please consider liking and subscribing. Also, check the bio for some of our premium offerings. We just launched our new website. We've got 3 different tiers: premium research reports where we discuss in writing something just like this, like we went over today, different plays that we're looking at, potential investments that the team is taking, the community's watching. And we also have a premium Discord where we're extremely active trading. We've got a bunch of day traders in there. A lot of our team is extremely active, posting constant trade ideas. We have an active positions channel. We host daily pre-market and post-market live stream calls where we actually take trades live together, share our positions, and really just try to guide you guys through these tumultuous markets. So guys, thanks again for tuning in. Please like and subscribe, and we'll see you next time.